Record on the screen. All right, so we are recorded. Okay, we are recorded. So going straight to the screen right about now. Before that time, I thought of always doing this analysis, maybe once every week or once in 2 weeks. So I'll be launching that section in my YouTube channel. It will be called um Black Wallstreet Call. All right, that will be the name, Black Wallstreet Call. So anytime you hear me talking about Black Wallstreet Call, just know that it's a kind of meeting where we come together, analyze, share my thoughts as to what I'm expecting in the marketplace and all that stuff. So I'll be launching that maybe probably this week or next week. I was discussing that with my team, and we're trying to set some things before that. So this is invite, admit all. We have a lot of persons that are joining. So pretty nicely we have gold, right? Can you see my screen? Can you see my screen, please?
Yes.
All right, if you can see my screen, please mute your mic. Who is that? Kindly mute your mic, please. So this is gold, right? Um, as at last year, 2022, right? I was shorting gold throughout last year. I was shorting gold throughout last year. The reason why I shorted gold throughout last year was that gold was more in a kind of bullish rally. And I knew that this bullish rally, right? You can see this candle. Who is that? Please mute your mic. Please mute your mic. Please mute your mic.
What is going 6,000 gold? You can look. 6,000. You really intention, I'm just talking. I'm going to 1,500.
Okay. So I think everybody's muted right about now. So back to what I was saying. So gold was in a bullish rally, right? Gold was in a bullish rally throughout during the start of 2020, during the start of 2022. Gold was in a bullish rally, and the essence of this bullish rally I knew was to grab the liquidity. You can see that there was buy side liquidity here, and you can see what gold did. It swept all this liquidity and now closed as a rejection candle. Now, what is liquidity? A lot of persons don't know what liquidity is. Liquidity is simply money, right? It takes money to move the market. And before the market moves, first of all, there has to be pricing at the institutional level. And that pricing would mean to, grab a lot of money um, from the retail standpoint. So the institutional traders seek to grab liquidity from the retail traders, and hence why this gold went to grab to this area and close as a rejection, grabbing this liquidity, buys and liquidity specifically, and it closed as a rejection. The next month, which was April 2022, it closed as a bearish engulfing. Now, this bearish engulfing, coupled with the fact that the market was trading in a premium area. Now, what is premium? You guys need to understand that the market buys at premium and sells, the market buys at discount rather, and sells at premium. Okay, get this straight. The market buys at discount and sell at premium. So the market in in the premium, yeah, and hence why when I saw this bearish engulfing, I knew that gold was about to decline. There was going to be a massive collapse in the prices of gold. And I started shorting gold. Throughout last year, I made over 1,000. Was it, what am I saying? Not 1,000. Let me check. I think I made over 3,000 or 4,000 people. I did the summary. You can check the Telegram channel. I did that summary towards the end of last year. We made a lot of money from gold last year. This was already 2,800 pips drop. I made more than 2,800. I made about 3,500 pips on this gold collapse. I was just shorting gold. Any pullback was a short. Any pullback was a short. So back to what I was saying. Towards the end of October, gold now dipped into a discount. Remember, I told you that the market buys at discount and sell at premium. So this was a premium that caused the collapse. It now did hit the discount somewhere around here. And after the discount, you can see that the reaction was that gold closed as a bullish engulfing, and I knew that this would mean that gold would likely reverse because it was at a discount area. You need to also understand the concept of risk on and risk off environments. This is more like a sentimental analysis terminology. You hear this most times in sentimental analysis, risk on, risk off environment. Anytime that gold is in a bullish rally, just know that it is on a, it's in a risk off environment, right? Anytime there's a bullish rally on gold, it means that is a risk off environment. The reason why it's a risk off environment is that when investors are not optimistic, right? When investors are not optimistic, they tend to be more capital protective. They want to protect their capital. And you see that that time they're taking money from other asset classes like, the stock market, bonds, major currency pairs, GBP, all those currency pairs, they're now pumping their money into a safe haven. Gold serves as a safe haven asset. So when they now pump their money into safe haven, it means that they are trying to protect capital rather than multiplying capital. So in that stage, you see that gold will be rallying at that point. And at that same point, you notice that the JPY will also be buying, all right, because these are all low yield assets. Okay, these are all low yield assets. So current at that time, gold was in a risk off environment, and it did rally and still came back to this point, this premium point. Let me delete this. It still came back to this premium point. And when it came to this premium point, we started seeing it, we started noticing some rejection. Hold on, let me zoom out this area. We started noticing some rejection. There was some price rejection somewhere around here. And if you really understand the concept of price action, right, you understand the theory of price action, and also you understand market structure, you understand chart patterns. I don't want to mention this chart pattern because I don't use a lot of these terminologies, but then you should know what kind of chart pattern is forming here. This is what we call triple top. I don't use it, I don't pronounce it out, but then I just need to use it so you guys can understand what is unfolding on gold. This is more like a triple top, and a triple top in the chart pattern perspective is an indication of a reversal. In this case, that this is happening in a premium array, this would be a bearish reversal. And also notice the price action. Notice the candle when after which this triple top was formed, there was a bearish engulfing in this premium area, bearish engulfing. So this showed that gold is about to short, but you cannot just start shorting gold like that. The monthly time frame has already shown you signal of a decline, right? This is already signs of this is already signs that this asset is about to decline, right? So what you do now is after understanding this order flow, that's why I keep preaching about order flow. Understand the order flow from the higher time frame. Give me a second. Understand the order flow from the higher time frame. Okay? Are you guys still hearing me? My network is, I'm just getting notification that my network is unstable.
Yes.
Okay, great. Are you guys enjoying the class already?
We are here.
Are you enjoying the class already?
I'm absolutely enjoying it, sir.
Oh, great, great.
God
So
bless you. God
that's fine, that's fine. So back to what I was saying. So understand the order flow. Once you're able to point the order flow is like a map, all right, showing you the direction as to where the market is going. So when you understand this order flow, it's very easy for you to scale down to a lower time frame and now know the direction you were focusing on. Stop trading randomly. Don't buy and be selling at the same time. Know the direction of the markets. Know the order flow. Know where the institutions are really interested in. Once you understand this and know where the institutions are focused on, you know where to channel your energy to. So after identifying that these assets, right? After identifying that this as a sec, let me miss some persons. Okay. After identifying that the order flow has now changed to the bearish side, you scale down to the weekly time frame. scale down to the weekly time frame. Now, on the weekly time frame here, this is just price action, nothing really twisted here. This is price action. Let me take this bar out so we don't have scattered charts. Now, on the weekly time frame here, we can see that there was a clear break of structure. Let me point this out. This was a break of structure. This candle broke structure and closed as a strong bearish momentum. This was a clear break of structure, indicating that this reversal is now valid, right? This bearish reversal is now very valid on the weekly time frame. The weekly time frame has confirmed that. So what do? You now plot out your premium again. Now the premium again here, it's somewhere around here. Now see what the market did. After it did as if it wanted to go up. I knew that this was a pullback. People were buying, gold is buying, gold is buying. I just knew that this guy was pulling back to test this premium for a further short. So I remember posting on our official Telegram channel at Ripple Finance that gold is about to collapse. Gold, I'm expecting over 2,000 pips decline on gold. I posted that. Now, why did I post that? Because I saw that this guy is already respecting the order flow. It has broken structure. It has now pulled back to the premium somewhere around here. And my call, now this is my call officially, as long as gold sustains below this premium array, you see this premium array that I have indicated here, you see it, as long as gold sustains below this premium array, gold is shorting. Now my overall target is, let me go back to the monthly time frame to spot out my overall target. My overall target is here. So I'm expecting a further collapse on gold from where it is now at $241 per ounce to over $16,663 per ounce. So I'm expecting a massive collapse on gold. However, we have a point of reference here, right? This point of reference is we have liquidity. This is a liquidity point, sell side liquidity. So if it breaks up below this liquidity, this is what will likely be holding price for another pullback. So if this breaks and closes below again, rest assured gold is hitting this level. This is a massive collapse on the prices of gold. This is my trade call now. This is my trade call. Take it from me. Gold is about to collapse over 2,000 pips. In a sec, let me take that. Let me get that tool. The short, let's calculate the amount of pips from where it is now. This is over 2,600 pips. Over 2,600 pips is about to unfold on gold. But then you should be sure of your entry points, right? So there's this particular tool I'm looking for. All right, cool. Yeah. So I'm expecting a short on gold. This, yeah. I'm expecting a massive short on gold. Prices of gold. Gold is about to drop to this price. But then let's go back to the weekly time frame to define our key entries. So now the thing is, gold has already closed. You can see the reaction. Last week it closed as a bearish engulfing. It's about to short. This is just a simple price action. If you understand the ICT, personally, I trade the ICT methodology. So I tend to, mix the concepts of price action with, what is happening in the institutional perspective. So on the daily time frame, I can see that I already have my premium tool already highlighted here. So I'm expecting gold to pull back into this premium before the short. All right, are you getting me? I'm expecting gold to pull back to this premium before the shorts, the official shorts. Okay, so what I'm expecting is something like this. I'm expecting it to first of all come here, then hit. So my first level target will be here. I'll take some things out here. But then before there's a conflict, because I don't just show you opportunities, I show you potential conflicts in the market. The conflict of interest is that fundamentally in the macro perspective, right? The macro perspective, the institutions are not really decisive as to if they're ready to add more contracts to short this goal. So have that at the back of your mind that institutions have not really, added enough contract on the short. But then before gold actually collapse to this level, institutions should have been interested and they'll add more contracts, all right? But price action, gold is about to short. Gold is going short. This is over 2,000 pips. And you guys should understand that 2,600 pips, I can make more than 2,600 pips because the market will not just move in a straight direction. There will usually be pullbacks and I'll have opportunities to add on more positions. So it could pull back here. I have another opportunity to sell here, pulls back again. I have another opportunity to short. It comes again. So I might likely make over 3,000, 3,500 pips on just this run, on just this decline, right? I'll add position there. I could add here, add here, add here. So if you add all those positions I'll be adding, that's a loss just on one asset class. I usually tell people that it's not about buying, selling, buying, selling. Just know the order flow, then trade in line with the order flow. At time is running very hard, so I will not spend much time. Someone says, "Oh, this guy is a bit string, guys. Swear, thanks for sharing. Would love to become your mentee." Haha. Yeah, boss. So that's from SMG strategy. This is that. I'll come back to this. Right. I don't want some things to distract you. We don't have a lot of time. But in case we get stopped, we get locked out on this meeting, we could likely schedule another one immediately, right? If we are not done. So this is just for gold, right? This is just for gold. You guys should just focus on shorting gold. Forget buying. Anybody that tells you that gold is buying, tell him to give you evidence. Have your evidence to present. That's why a lot of things ahead. Let me show you guys again. Apart from I just saw something immediately while I was talking to you guys. Now there is another chart pattern here. Watch. I like giving people evidences. What kind of chart pattern is here, guy? Check. Notice what kind of chart pattern is here. What is unfolding here? What is unfolding here? What is unfolding here, guys? Gold is about to short, bro. Gold is about to short massively. Gold is about to short massively over 2,600 to over 3,000 pips. So anticipate that on gold. I'll not waste much. I'll not just waste another time. Let's go to the next asset, right? The next asset, I think we should touch on oil. Let's check oil prices. I called a rally on the prices of oil. Let me go to the monthly time frame already before we start talking much. I called this collapse last year, sometime last year in April, the collapse of crude oil from $102 per barrel to over $84 per barrel. You can see that gold, this oil, I keep mentioning gold, all they hit my overall target, which was at $84 per barrel. And after that, it went into some series of consolidation and all that. So just earlier this month, notice this is a discount. A discount in terms of a breaker, right? If you trade the smart money concept, ICT, this is the breaker block. This is a breaker block, right? Coupled with this candle, which makes it an order block. So there are two strong discount arrays somewhere around here. So this shows that this asset was in a strong discount area. Now we studied the price action after oil dipped into this discount area. There was a bullish engulfing, very strong bullish engulfing, which signaled a bullish rally, right? But before that is confirmed, let's go to the weekly time frame to confirm what it showed to us. On the weekly time frame, there was a break of structure, a clear break of structure. Immediately, this guy broke the structure close above here. I knew that oil was about to rally. Yesterday, I made the call that oil is about to hit $100 per barrel. Let me show you why I made that call. This is the first level of the premium, right? The first level of premium. So this guy is about to hit over $100 per barrel. My overall target is this high, which is $120 per barrel. So I made this call officially. Someone reposted my status on WhatsApp. Instead of him to screenshot the status with the origin of where the analysis is coming from, he saved the picture, right? He saved the snapshots and copied the caption and posted it as though it is coming from him. I'm not stopping you from, posting some things that comes from us, from Redboard Finance, but then try to give credit to the owner. This is an intellectual property. Try to give credit to the owner. Don't don't present yourself as the messiah, as though you came out with the stuff. Do you understand? So I remember reaching out to him this morning. He was telling me, boss, boss, boss. That it's not a matter of boss. If you are free to screenshot, you are free to reshare it, repost, but then give credit to where the material is coming from. All right. I don't have any problem in you reposting, but always remember to give credit. Okay. So oil is about to rally. So the call I made yesterday was I have my long positions on oil. I bought it here somewhere around here. I bought it at $79 per barrel. I'm already long on oil. This was my long entry. My stop loss probably went below this discount block. So oil is about to rally. The first level target is $100 per barrel. Overall target is $120 per barrel. So fundamentally, in the macro perspective, I've checked every fundamental every fundamental data that has to do with crude oil. As of last week, institutions added some contracts on this oil. So oil is rallying. Nothing is stopping oil from buying. Institutions are already buying oil. So I'm making this call from an institutional perspective that oil is rallying already. You can see that the result is already unfolding. Yesterday when I shared it was at $79 per barrel. See what happened now. It's currently at $83 per barrel. That's a whole lot of profit. Calculate this distance from year to year. Remember, this is the daily time frame. This is not your usual 15 minutes, 5 minutes time frame. I call as though I am calling for an institutional trader. This is already buying. Currently, oil is trading at $84 a barrel. Oil is trading at $84 per barrel. So find entries. Just look for entries. If you don't know how to look for entries, I don't know. But then just find subsequent entries to go long on oil, on your 4 hours time frame and your daily time frame. Avoid going to M15, M5. No, I don't discredit people who trade those time frame, but then there are just there are lots of conflicts on those time frames. There are lots of conflicts on those time frames. Institutions don't focus on those time frames. These are the time frame these guys focus on, and this is where it gives you the order flow very clear. The structure is very clear. All right, so that's that for oil. Next asset is, let's check USDJPY. USDJPY, yeah. Going to the monthly time frame, it's very clear that this guy is still in the bullish rally, right? He's in the bullish rally. So all these black stuff you're seeing there is me identifying the premium. So this is a premium here. This is my first level premium, my second level premium, which is the main threshold on this other block. The mitigation, right? If I'm not mistaken, and the high. So these are all my premiums, and this serves as my targets for any buying pressure. So it is clear that the momentum and the order flow is bullish. Going to the weekly time frame, let's see what the guy did. It did collapse. I'm getting a notification that we have about 10 minutes left. Right, in case we get stopped out, right? In case we get locked out, rather. In case we get locked out, check my WhatsApp status. I'll be posting another link. So in case we get stopped or we get locked out without anybody notifying each other, just check my WhatsApp again for the link to rejoin. All right. So I'm just saying this in case we get locked out. All right. So just take that. Check WhatsApp, check Telegram, check my WhatsApp, check Telegram. I'll post the link on both channels. So we just complete this analysis straight away. So this guy did pull back into me. I knew it was a pullback, but some guys were saying GBP USD is shorting, is declining. I knew that this guy was just pull back, right? The reason why I got stopped out was because I did not check the macro numbers, the macro data. That's why I did not really realize that this guy was about to decline was about to, the pullback was about to go this far. I was thinking it was going to stop somewhere around there due to price action and on the daily time frame. But when I checked the macro data, I knew that it was going to go this far. So you can see that it held at the discount and it started rallying. Look at what happened. Going down to the daily time frame, we just know that we are focusing on buying this asset. So we can see that you can see that, let me zoom out this. This is a discount. A discount has been highlighted somewhere on here. A discount has been highlighted. So what I'm expecting on USD fundamentally, USD is buying. All right, fundamentally it's buying. Macro number is already bullish. Institutions have added some contracts, so this guy is buying. So my first level target is this particular tool I'm looking for. Okay, call for first level target here, right? Second level target here. So once this guy pulls back, look to buy. Once the guy pulls back, just look to buy. I'm looking for a pullback to this entry, so it's going to be something like this. Pull back here, buy. It will likely reject here, gives another pullback before it strikes this level. So this is the price action. So the call here is that USD is buying, right? But as long as this guy sustains above this discount, then we are buying. Target is here. As long as USD sustains above this discount, USD is going to hit this level, hit this level, hit this level, and but before we get here, we'll know how to find our way there. But this is the first level target. Yeah. Once it hits this target, we'll still come back to reanalyze and check possible price movement. So that's that for USD. We have about 6 minutes left. Should we continue or should I wait for a question? So when you guys ask the question, we just, in case we stopped out, we get locked out, we wait for the new section. Should I give an opportunity for any question? Someone said bought oil yesterday, made very nice one. Yeah, I took that oil trade and we drilled it last year. Oh, okay, King, yeah, King was with me last year when we took oil. Yeah. Question. Okay, please. What's this guy's name? Aloysius, please unmute your mic and speak if you have any question before we shoot. If you have any question, please unmute your mic, ask your question, and we continue. Nobody's asking questions, so we'll just continue. Let's continue. Great. So, quick one on. Okay, before we move to that, let me speak on the risk on and risk off environment on the yen. So currently, anytime the yen is on a bearish momentum, anytime there's collapse on yen, right, the Japanese yen, it simply means that yen is on a risk-on environment, meaning investors are willing to take risks. They are optimistic, they are excited. So when they're excited, they are willing to risk their money. They are not looking to protect their capital. They are looking to multiply the capital. So currently, the Japanese yen is on a risk-on environment. So when the yen is shorting, any currency that is paired to that Japanese yen, of course, will be in the opposite direction, which is bullish, right? So the yen is currently on a collapse. USD will be the opposite, which is a bullish rally. So fundamentally, sentimentally, and technically, USD is lining up pretty nice for a bullish rally. All right, understand that. So just look to buy, just look for a pullback, then buy USD. Hold it, hold your trade, add more positions when you see the opportunity to add more position, but don't trade against the other flow. Don't look to short. Forget any shorts. Any short entry you see is just a distraction for you to forget the overall entry. So quick one on GBP. Still the same thing. GBP, I've been buying this guy since January. Since January, I've been buying this guy. You can see very clear bullish momentum right from 2021. This guy has been in a bullish momentum, right? So let's just go to the weekly time frame to identify some. You can see that there was a liquidity void. This candle came to fill that liquidity void before the rally. But the reason why I'm not buying this GBP, I will tell you why I'm not buying. technically and sentimentally, GBP is buying. Technically, sentimentally, GBP JPY is buying. The first level target is this 186.789. Next level 195.687 and all that. So technically the guy is buying, and if you can see what is unfolding on this asset on the daily time frame, what is this? What kind of pattern is this? What kind of pattern is this? What kind of pattern is this? This is just price action. Yeah. So this should tell you that there are a lot of things that are holding on, that are backing this buy momentum. But the reason why I'm not buying, but then you can buy, right? But then I have some trades open to risks. All right. That's why I might not be adding position on this asset. So I'm looking for it to pull back to this discount. All right. You can see you can see that I have my stocks highlighted already. The reason why I have this is because I'm expecting a pullback to that discount. So it would be pretty much like this. Hold on a sec. I'm looking to subscribe for the premium package, but then I'm still confused as to which one to go for. That's why I'm not subscribing. I keep using this basic package. So I'm looking for something like this, right? So first of all, go back to this discounts, then rally. So my call officially is that GBP JPY is in a bullish rally. However, I'm waiting for institutions to add more contract on the buy side. So once they add more contract and I see that, I'll share that to my guys and to our clients and members. If you want to partake in all these calls, just subscribe to the copy trading, the prop firm copy trading. I'll be taking all these positions in that prop firm copy trading. All right. So just subscribe. It's pretty much about you're paying $300 to 10 trade to grab the account, pay $99 as managing fee to management fee rather to Rebel Finance. 10%, anytime 10% is made on your account. The deal is a win-win, right? So JPY bullish rally, that's confirmed. Let's check CAD JPY quickly. Now, the major export of Canada is oil, right? It's crude oil. The major export of Canada is crude oil. You have to understand this. Check the market from a macro perspective, from the fundamental perspective, then come to the technical to find your entry. Fundamentally, the major export of Canada is crude oil. So if crude oil is buying, what should Canadian dollar do? Buy, of course, right? Buy. So the other flow you can see already from the monthly time frame that's been bullish. That is confirmed. That's been bullish. Other flow has been bullish. So coupled with the fact that oil prices is going up, so CAD JPY should be going up, and of course GBP JPY and of course JPY, which is the yen, is in a risk on environment, which is shorting. So the opposite would be buy. So CAD JPY